Hey guys, this is Simon with Trade and Perform Coaching doing the trade review for Monday, August 21st. So this is the public trade review, and the primary thing I want to cover tonight is what do you do? What do you do when you fall out of sequence, right? When you don't have your process down and things start going wrong, and how do you recover from that? So that's what I'm going to cover tonight is basically what do you do when things don't work the way you envision them. And it's even more frustrating when what you envisioned plays out, but your executions end up getting stopped, right, on your trade. So before I start that, quick legal notice. Past performance is not indicative of future results, and this is for educational purposes only. You can pause the video if you want to read the rest of the legal notice. Okay, so coming in this morning, a couple things. The only place for me we wanted to trade that was clear were the yellow zones. 24, 29, 50 was a short location, first time in. And then our long locations were all lower, right? So remember, these locations, the green locations, are not trade locations for us. They're just points of interest where more advanced traders may look for a trade. And my goal is not to predict every nook and turn in the market. My goal is to place the trades just like the yellow zone was, where I think I have the highest odds of getting a counter rotation and being able to take a trade out profitably. So when we go to the video for today, let me see if I can get this here real quick. And here we go.
Good morning. This is Simon with Trade.
Paused. There we go. So let's see where we are here. There we are. So this is all the market preview stuff here. And so in the morning, you can see we open up right out of the gate, and I'm going to show you what went wrong. So number one, we my plan was to short 24, 29, 50 first touch in. It didn't get there in the morning. Also on NQ, so this NQ white zone was a very valuable location. And the problem was the stop that was required, 10 points behind, was too large for the risk I'm willing to take. So we pushed into this 58. My goal was to get the short out of 58.10. You're about to see why I got frustrated. So my thought was that we would push down first thing in the morning and then that we would U-turn. That was the primary thesis for the day. So you can see as we rolled along here, we push. Now I want to show you that, right? See how we pushed up into the white zone there? Okay, my short's sitting right here. We pushed to 58.07 and a quarter, basically 2 to 3 points away, which is nothing on NQ, and I don't get filled. We don't get the 24, 29, 50. So in the interest of keeping this relatively short, we then push over. Okay, now I'm going to pause here. This is my next location that I'm looking for a long on NQ with the idea that we would get a U-turn out of here. So I take the long at the top of that zone, 57.71, and the plan was to scale in all the way through the zone. You can see that they try to hold it, right? And then it gets stopped. And my stop is sitting 10 points behind here. I get taken out on this wick. Market then proceeded to go, ironically, 2 points lower and then reverse. So a couple of things happened here that were really important. First of all, I got frustrated. I didn't have NQ short out of the white zone. I didn't get ES short out of the 24, 29, 50 because it never got there. Otherwise, I would have had it. And I'm now taking a stop on my long at 57.71, which is pretty rare, right? So what do I do at this point? What happens? Well, I allowed the emotion of the moment to get in my head, essentially, and I missed something that's very important here, and I want to show you. I'm going to advance it just a few bars, and what you're going to notice here is on this next push down right over here. See that right there? I noted it. So this is a video that we had in the room. This is 5-minute tick divergence right here at the low, so I want to go back and point it out. When we came to this low back over here, okay, so realize I just took my stop, right? So see this bar sitting here? I'm managing the emotion of taking a stop. Why? Because what I don't want to do is turn around and start flailing and trying to, well, I should have been long, I should have been short. Is the market, what's going on? Are we going to drive to zero? And I totally miss that at the close of this bar, see that close of that bar? Clear 5-minute tick divergence into the low, right? Easy setup. I totally missed it. That's all there is to it. I missed it. There's no excuses, right? Again, the normal plan would be to short the backside of this test, but again, my plan called for the market to U-turn and push up into the presidential speech this evening. We're going to push forward here a little bit. You can see that we wiggled around, but look at the extension off of the 5-minute tick divergence. You can see we came back and retested the opening print, right? And remember, so now NQ has turned, right? So I want to take a step back here. My frustration has now gone from I didn't get the shorts, right? I got the long and I got stopped. It's now made the U-turn, and a significant U-turn, right? From the top of this is now a 20-point move. It's $400 a contract. That's a good day for me with the size that I trade. I'll take $400 a contract all day long, right? So I've come in, I've, quote, called the market right. I had pretty good location, not good enough, but pretty good location, right? And I followed my trade plan on ES all the way through. Okay, so for those of you that are new, let me make sure I categorize this. The yellow and white zones have the highest odds. The additional setups like tick divergence, we have delta pushes, divergence between NQ and ES, those are all secondary setups. So at this point, what I'm dealing with is failure to get short the white zone, no short out of the yellow zone on ES. I missed the 5-minute tick divergence. You can see I've drawn it out right there. And my frustration is really building up here. Now, this is important. Just like a pitcher who's having a bad day or a quarterback who's having an off day, I'm having an off day at this point. And I also know that at this point I've missed my trade, right? So instead of flailing, the next concern that comes is like, look, I think the low's in, and my thought process is we're going to U-turn on this thing, which, by the way, we have. We're trading at 24.34 right now into the Asian session, right? Okay, so let's take a step back. What you don't want to do. You don't want to start flailing all of a sudden. You don't want to start chasing. The worst thing I could have done is said, you know what, it's just going to go up. I'm going to take a long here. But what I also did was I said, because I think it's going to go up, I don't want to take the short at 24.2950, and I didn't. Okay, so I want to reiterate that. I did not take the short at 24.2950, and it's about to cost me, and you're going to see it here. We push up. And you're going to say, well, how could he gotten filled? But if you go back and look at your time and sales, 2,500 contracts went off at 24.2950, and anyone who wanted to get filled on the short side could have gotten filled on the short side. So I've made one error. I've decided not to take my trade, but I haven't made another error, which is deciding to chase this thing up, because watch what happens here. I could have said, well, that's it. NQ is going to V-shape, reverse, and close at the high of the day, and let me grab it here long, right? If you watch what happened through the afternoon, and what I decided to do here was just simply leave for lunch, right? I'm having a bad day. I know I'm off. I don't want to dig a big hole. Watch what happens here as we come around. I'm going to speed this up. Here's where I make my last mistake of the day, by the way. We come all the way down on this move right here. See this right here? That move right there. That's a push to a new low with clear tick divergence. You're about to see me draw it up here in just a second. Okay, tick divergence right here. We've pulled back from 24.29. Again, once again, I should have had the short, wasn't short. We've rolled all the way back from 57.95 all the way back to 57, essentially 75. 20 points down on NQ, right? And remember, my thought process was that because the president was speaking tonight, that we would have rocket fuel to the upside. Now watch the end of the day. There's your tick divergence. There's your attempted blast. Oh, I take it back. Here's where the tick, I was a little early. This is where the tick divergence formed. You're going to see that I draw it up right here in just a second. I think I do. Maybe I don't. I did point it out either way. And additionally, this is a 50-60 retrace. I'm pointing out this is a 50-60 retrace into the 56 into NQ. This is also 50-60 retrace here. And again, at this point, I'm just hands off the keyboard. I don't want to bury myself. I'm certainly not going to short after we've already had the rotation down. And then the slap in the face is the push to the upside, which you'll see into the close here. We finally rolled to 24.28 from 24.22. So what's the lesson in all this, right? Other than I had a read and I didn't execute well. Well, a couple things. First of all, the zones work, right? Good news. Number one, this is what it should have looked like this morning. Touch in, touch out. It's summertime. It was a little bit of a weird day. The zone kind of pushed past. next, the the um, the next point is I did not overtrade. I didn't bury my account, right? The third point is there's room for improvement on execution. I know exactly now, I've gone back and visualized exactly how I want to execute it for the next day, right? And it's really been a phenomenal August. I'm in danger of overtrading from overconfidence. So the way I'm going to look at this is a good reminder for me to get back to process, put process first, what my market hypothesis is second, right? And execute. And finally, I get gratification from having the right read and not forcing the short when we're in the hole. Anyways, that's my 2 cents, guys. I certainly hope this helped. I have 2 suggestions for anyone who's a trader. Number one, do not, losses are normal, okay? But you should not be drawing down consistently. If you're drawing down consistently, stop, right? Stop and paper trade until you figure out what you're doing wrong, or go find a mentor to help you out. Number two, don't blow up. That's just, you work too hard for your money. If you need to take the time to figure out how the market works, there's lots of good mentors out there, myself included, but whether it's personality, money, whatever the case may be, you just don't like how I trade, find a mentor who suits your style, who has a lot of experience, and who can walk you through the many phases of the market, right? So that you can consistently stack chips. The goal is to stack chips day over day, not make one day your whole home run. And then the other side of that goal is not to bury yourself when things are not working right. Anyways, my name is Simon. I'm with Trade and Perform Coaching. If you'd like to come check out our room, email me at tradeandperform@gmail.com, and I'm more than happy to extend an invitation. Hope everyone has a wonderful night. I will see everyone tomorrow.